No, I think, the themes that we discussed in the past are still front and center. Inflation, I think, is the overriding theme of 2022, and the impact on, global economies, policy, earnings are all taking effect. So, you're seeing a market that is really uncertain at this point. It's trying to find its footing as far as, are we going to witness a recession, and how deep and how long that possibility may occur. So we'll learn more of that with more information. Like you said, we have a jobs report, we have an inflation number next week, and I think we'll see more and more information come through, which will help the Fed make its next few moves here.
David, we've been covering the cost of living crisis, so what we are seeing through the lens of a spiking energy price, one that's been sustained at very high levels given the supply dynamics here. And you point out that you're still looking at this commodity that you call the best and cheapest sector is energy at this stage.
Yeah, it is. I mean, we've looked at obviously the sector for the past few years, correctly calling how we expected to see all the increase in M2 money supply, the effects it would have on the global economy, the tightness of labor, higher inflation, and then ultimately what that leads to see sustained inflation rates, and thus lower growth rates. And we're starting to see that impact today. And yet energy, as we're seeing, given the war, given lack of investment now for a number of years, is still front and center. It's still king of the jungle as far as the best commodity out there. It's still having a great year, even though recently it took a dip. So, we're looking at it going out the next 24 months. I look at some of the producers in the upstream side that are trading at, very low multiples of cash flow and free cash flow, trading at 2-3 times cash flow and, 20 to 30% free cash flow yields when looking at strip. It's just one of those sectors to me that, screams value, where the rest of the market, I think, still is in a bit of a malaise.